Hello, everyone. A very good afternoon from a very rainy London, and a very good morning wherever you are around the world. Thank you all for joining. We're just going to give it a few more moments for others to join, so bear with us. Today, we are going to be talking about the UK CBAM, what we know so far, and where CarbonChain can hopefully give you some advice around what to do to start getting ready. I'm sure many of you have been engaged with the EU CBAM, so we'll draw some parallels from that, as well as look at some of the variations between the UK CBAM and the EU CBAM as well. So we'll just give it another moment. I'm just going to see how the attendees are looking. Fantastic. Cool. Okay, so we'll just give it one more moment and then we'll get started. So this session is going to be recorded. We will also share the slides. There is a Q&A section open in this Teams link, so hopefully everyone can ask questions as we go through. If you do have any questions after the session, then you have my contact email address on here as well. Cool. Okay, so let's get started. Firstly, thank you all for being here. My name is Nick Ogilvie. I am a customer success manager here at CarbonChain, and a CBAM specialist as well, helping lead on a number of CBAM implementations for the EU CBAM across a wide variety of CBAM goods importers, and their implementation progress for managing the EU CBAM reporting, and kind of strategy and decision makings around CBAM, as well as then more broadly at CarbonChain, we're supporting a number of installations across the iron, steel, aluminium and fertilizer sectors with preparing their CBAM data, understanding what it means and how they can start to think about the commercial implications for them. But today we're going to be talking about UK CBAM. So we're going to dive straight in, but just quickly, a little bit of an introduction on CarbonChain. So we are a carbon accounting software provider. We work within the commodities sector, really tailored to metals, mining, energy, and agriculture companies. CarbonChain is itself a platform that enables supply chain emissions to be measured. We sit upon a data set capturing both asset level emissions factors across these supply chains. And now as we start to see more and more CBAM data surfacing, enabling informed decisions around CBAM costing and CBAM analysis across those procurement decisions that businesses are starting to get to grips with as we gain more insight into CBAM cost and its impact on these supply chains. We'll talk a little bit more around how CarbonChain can help later on in this session, but let's dive into a bit on UK CBAM. So similarly, hopefully, to EU CBAM, the only thing missing in the comparative between the two is electricity, which was deemed to be not at risk of carbon leakage here in the UK. You'll see as well that the glass and ceramic sectors were both also dropped following the latest consultation. Relatively low volumes, relatively that kind of leakage risk. Something was reviewed. Fundamentally challenges there on decarbonisation as well, which I think we'll start to see cropping up again. The consultation outlined that the scope of goods will remain under review until 2027, and then going on into those first CBAM processes. So this is set for now, but as we see with the EU CBAM continuously looking to review its scope, EU CBAM currently looking at more downstream goods, but also as we see the scope of the EU ETS aligned with the scope of the UK ETS also increasing, we will see more goods falling into the scope of these pieces of legislation. From a CN code perspective, so where we drill down into these aggregated goods sectors, we really see a very close alignment across these. So it's worth reviewing the impacted CN codes and commodity code classifications that you have for your business, and that's one of the key kind of pieces really where you need to start on assessing your CBAM impact. in order to inform which goods and which suppliers fall in scope of your calculations and the awareness that you need to drive within those organizations. The other piece really to call out here on the scoping is with regards to kind of the ongoing discussions that we have seen with regards to scrap. Now, this is something that has had many kind of heated debates and discussions, both on the aluminium and the steel side. But in line with the EU CBAM, the UK CBAM has also stated that scrap, effectively all scrap is scrap. There will be no pre-consumer or post-consumer scrap definition, and everything here again is going to be set based on the commodity code that it comes with and is imported into the EU under, and this will determine whether or not those goods are within the scope of CBAM reporting. So hopefully, no significant changes or significant kind of unexpected pieces here on the UK CBAM scope from an aggregated goods category perspective, and one that will hopefully benefit from the work that's gone on the EU CBAM side as businesses in the UK start to reach out to their suppliers in order to drive awareness and data collection and preparation under the UK CBAM. Obviously, one of the kind of biggest challenges that EU CBAM businesses have faced is obtaining CBAM data, in some cases from EU-based installations under CBAM. And so we will hopefully see some smoothing of that process as UK-based businesses start to request UK CBAM data, which again, we hope, given the close alignment of the UK and the EU's ETS, will be consistent across the board. One of the most important pieces with regards to the scope on CBAM in the UK is that indirect emissions are included in the scope of the UK CBAM. So what does that mean? Well, I think critically, when we think about CBAM, I think maybe some have seen the expert meeting committee minutes where what CBAM is really focusing on is steel. Around 70% of the EU imports that were captured by CBAM volume are the steel sector. And so this is where, one of the crucial pieces, both for steel, aluminium today under EU CBAM, electricity or indirect embedded emissions are out of scope of the EU CBAM, citing various complications with regards to their calculations and ensuring that level playing field. The UK has gone ahead and included the indirect embedded emissions within the scope of the UK CBAM. Now, this is quite a big deal in the sense that this is a kind of deviation from the EU's stated objectives around the definitive period, although these do remain under review, and we could see indirect emissions featuring within the UK CBAM in the definitive period, although it's unlikely. There are a number of reasons why this is potentially controversial or difficult to reflect in the actual policy, and one of them is just the fact that in the UK, there are a number of different mechanisms and schemes that subsidise electricity for large consumers of electricity, which may mean that there will be challenges with regards to calculating, what the UK CBAM rate will need to be for certain goods when they are imported into the UK. And fortunately, I guess the UK is looking to make that CBAM rate a relatively simple and transparent calculation that will hopefully facilitate that comparison. The real challenge is going to be around the proof with regards to any carbon price paid overseas with regard to that indirect embedded emissions associated with non-UK, non-EU electricity market mechanisms that include an effective carbon price paid. So the graphic that we're looking at here, the only variation between UK and EU CBAM is that red highlighted box of electricity in the bottom left there, which in the definitive period for CBAM would not be included. But as we've just seen, the commodity code list and the CBAM goods list that are captured under the UK CBAM aligns with the EU's, and therefore, we would not expect to see certain components such as non-ferrochrome, ferromanganese, ferronickel products feeding into the crude steel production emissions intensity as precursors, and things like upstream fuel production, material production would also not be in scope of the UK CBAM. Again, similar for the aluminium sector, where just like under EU CBAM, the bauxite mining and the alumina refining processes are not captured within the system boundary for either the UK or the CBAM or the EU CBAM on the basis of the commodity codes that capture these goods. So this is certainly going to be one to keep an eye out on with regards to indirect embedded emissions. Has a much bigger impact on aluminium compared to steel products. But certainly going to be an interesting one to see how the UK intends to manage the variables with regards to the mechanisms around subsidising electricity. And this is one of the main reasons why the EU did not include indirect embedded emissions within the scope of EU CBAM to start with. So one to keep a close eye on, but it's an interesting tack from the UK, and one that particularly on the aluminium side makes a lot of sense with regards to where the bulk of the embedded emissions of those products lie. Moving on to the CBAM across supply chain. So just like we've seen with EU CBAM, we are very much reliant on our suppliers to provide us with data to enable reporting that is commercially sensitive in one sense, but also enables the use of non-default value reporting for those CBAM returns that we're going to come on to with regards to how and when you need to purchase pay your CBAM tax, unlike within the EU CBAM. So this is hopefully a graphic that many of you have seen before if you've joined any of our webinars, which again reiterates how complicated it is to obtain underlying precursor data or simply just installation data from your suppliers, and some of the key challenges that we've seen in the EU CBAM with regards to obtaining information to ensure you bring that share of default values below the 20% threshold under the EU CBAM. So as a UK declarant, buying and importing CBAM goods into the UK, your installation A scenario where you're buying from a complex goods manufacturer of maybe steel or aluminium products in the US, and they buy from another installation who are your precursor supplier somewhere else in the US, and they also buy maybe their crude steel from a Chinese mill or an Asian mill, for example, who are also then buying their precursor ferroalloys or DRI products, for example, from another supplier. So that process takes time, and so recognizing how short of a time frame many businesses in the EU have had, and the longer time frame that we have in the UK here to initiate those conversations on primary data and to educate why it's really important that primary data starts to surface. We will benefit off the back of the fact that we have EU CBAM data in many cases, and we can hope that the UK CBAM aligns very closely with regards to the reporting or at least the system boundaries and the calculation methodologies off the back of the fact that the UK and the EU ETS is aligned so closely. Many people will look at UK CBAM and go, hey, but we've got default values for the first 3 years. Why don't we just use those? And I think one of the things that many businesses are recognizing as they start to receive more and more CBAM data from their suppliers is that the emissions intensities of production across different paths, particularly on the complex goods side, result in very significant, in some cases, very significantly different emissions intensities on production, primarily driven by the efficiency of production. So on those sites making CBAM goods, if they have significant waste or they require a significant volume of precursor to make a much smaller volume of final product, then all of that emissions intensity from those precursors being allocated to those final products is resulting in very high emissions intensities in some cases for those CBAM goods, and therefore getting a grip and understanding what those actual figures are as early as possible to help educate your suppliers with regards to the cost implications of importing these goods going forward is something that we see as a really important activity for UK declarants to start as soon as possible to ensure that they can smooth that process with regards to the acquisition of primary data. It's also important with regards to discussing with distributors or intermediaries with regards to CBAM cost. There should be a general consensus that the default value will be punitive. And therefore, from a commercial viability perspective, having actual data will be beneficial for you as an importer, as well, specifically with regards to cases where you subsequently export that material into the EU, where you will definitely need actual data to inform your calculations, as well as the fact that, those default values, which may well be subject to change, can also have a relatively negative impact with regards to any commercial decisions that you're making in the longer term. Whereas, as you build up those relationships and see verification coming in from installations producing these CBAM goods, then that's something that hopefully you will see enabled more clearly to enable you to form better kind of financial planning and financial management if you are going to be significantly impacted by the UK CBAM legislation. I touched on it earlier, but just to be crystal clear, so the UK CBAM default values will be trade weighted. So the UK will propose that a number of different ways, and they really kind of discarded others and focused on this trade weighted one, where they're looking at the emissions intensity of production based on the different trading partners. So the EU in this case having a very large impact on this trade weighted default value, but they will be punitive. So they will effectively have a penalty on top of them where, based on the average sourced product from a trading partner, you can expect this figure to be greater than if you were to have received actual data from those suppliers. They don't necessarily enable you to then also factor in any overseas carbon price that's been paid, which is another important factor as we start to see more and more of these ETSs cropping up in response to the EU and the UK CBAM. The default action if you are a net exporter of goods is to implement implement an ETS in order to capture these revenues domestically. And then the action if you are a country at risk of carbon leakage or a kind of real net importer of these goods is to establish a CBAM. So the default values in the UK, they'll be at a commodity code level and they will be available for use to enable full compliance for any importer until at least 2031. So at least the end of 2030, they'll be there. We suspect they will go on for beyond that date, but as we've mentioned, getting actual data, obtaining that from your suppliers, not only will be key for ensuring you kind of have a clear cost implications, but also hopefully bringing down that CBAM cost and making your products more competitive. When we think about it in the context of other regulations, hopefully if you're doing CSRD reporting, ISSB reporting as a business, and you are operating in these CBAM good supply chains, it's very likely that this is one of your most material components of that reporting, where you will have to implement data quality strategies behind improving the data quality that you use to do that reporting. If you're setting any decarbonisation targets, then you're not going to necessarily want to be relying on default values or country averages for the products that you're buying. And so leveraging CBAM, leveraging these other sustainability reporting regulations around carbon to drive engagement with your suppliers, get them reporting in line with these requirements, will also hopefully enable you by 2030 or even by 2027 to have actual data measured properly, where that commercial advantage for the manufacturer to know exactly what their emissions intensity will be, exactly what their CBAM intensity will be, will really enable them to stay competitive and understand their competitive positioning within this marketplace, where carbon intensity is no longer just a kind of marketing component. It's really a license to operate for businesses within these carbon intensive sectors. And so this is where, yeah, the primary installation data. So this is those actual figures based on, the product emissions across, if we're looking at the EU CBAM across a range of qualified parameters, the carbon price already paid, which we know will also feature within the UK CBAM calculation as well. There will also be similar verification requirements and equivalent requirements around the precursors that those installations, the data they need for those precursors as well. So nothing significantly different here with regards to the EU CBAM, but something that we will expect there will be, discussions around how we can align with that reporting requirement between the UK ETS and the EU ETS, which, as we know today, are born out of each other, and so to a certain extent follow very closely with regards to the existing monitoring, reporting, and verification. So we mentioned it briefly, but yeah, the UK CBAM is not going to take the same form as the EU CBAM when it comes to paying the carbon cost. So the EU CBAM will have its certificates that you purchase on import and then surrender at the end of the following year. The UK liability mechanism for CBAM will be based on a CBAM rate that is determined on a quarterly basis, set by the UK government, set by HMRC, who will be taking over the administrative side of the UK CBAM, which aligns very closely to how the UK ETS price and the rate for the UK ETS is set. And so we will see a UK CBAM rate for each sector, which will be determined and effectively will capture each of those kind of 5 aggregated goods categories that are now set across the UK CBAM. So you will look at the embedded emissions, both the indirect and the direct, not just the direct. If you're under the EU CBAM on steel and aluminium, for example, you will then take your CBAM rate. You will be allowed to deduct any overseas carbon price paid if you know that it has been paid and you have evidence of that payment taking place. Again, we expect that there will be some additional documentation and validation or verification that will need to come into place to be used in order to do that deduction. And then you will submit your return, just like you do your kind of quarterly tax return, VAT return, and it's really self-policed. So you will submit this return as the amount that you will pay each quarter, just in the same way that we do for other VAT tax reporting at the corporate level. And so that will give you your UK CBAM liability, which effectively will be a CBAM cost per ton of those materials that you are importing into the UK. As we mentioned, we do have these kind of compensation schemes in the UK around indirect, and so around electricity, and how these are going to be factored into the rates and the adjustments, any exemptions in there, is something that we will, have more insight from the UK government, from HMRC, with regard to that process, that will likely sit within the returns forms that will be filled out on that quarterly basis. So what does that look like from a timeline perspective? Well, I've talked a lot about quarterly reporting, but actually the first accounting period for CBAM will be an annual period. So the CBAM will come into effect on the 1st of Jan 2027. And really, if you are an importer of CBAM goods, all you need to do is track those imports in the first year. And then on the 1st of Jan 2028, once that first accounting period is done, you will then need to start to really prepare your return, or hopefully you're doing that through the course of the year. And then by the end of May 2028, you will then be submitting your first UK CBAM return. Now, the dates here are an interesting one, because as soon as we enter into 2028, your CBAM returns as well. So I suspect there will be some form of overlap between the first quarterly return and the first annual return. But the intention here is that for that first annual return, as you're aggregating all of that primary data from your suppliers to calculate what your return will look like, then this will form the basis of that first annual return, and then hopefully going forward enable you to very smoothly track and account and then report those ongoing quarterly returns from the 1st of Jan 2028 onwards. As I've mentioned, this is all going to be administered and checked by HMRC. The returns come with the associated penalties that we currently see in line with kind of the VAT penalty points. And just like we have for VAT in the UK, you will be able to do late submissions and late payments, provided they're arranged with HMRC, which again will be akin to what we have with the EU CBAM today, where you can do late submissions. You just need to engage with each country's kind of national competent authority in this case. Just like in the EU, well, to be fair, that's not entirely true, but so in the UK, we will have, in line with kind of any evasion of tax, we will also have criminal offences for fraudulent evasion of the UK CBAM. In the EU, we will have the fraud office involved in the reviewing of CBAM declarations in the definitive period. So that's similar to where the level of rigour and kind of control over these declarations will come in, will start to be significant as well. So it may feel like this is 2 years away, but it is only 2 years away. So definitely one to start to think about and start to factor in, because unlike the EU CBAM, there is no real transitional period. There is an annual accounting period for the first return, but the CBAM cost, it comes into effect on the 1st of Jan. So any of those goods being cleared from the 1st of Jan onwards, you will have that CBAM. You will have that CBAM cost. It's just you won't need to make that first return submission until the end of May the following year. So if we were to kind of sum up any of the kind of key comparisons between the EU and the UK CBAM, as we've mentioned, electricity being the only one in the EU that varies on the aggregated goods sector basis, the UK excluding ceramics and glass following the end of the consultation. The EU, we have our transitional period happening at the moment until the end of 2025, and then we'll have our definitive period from the 1st of Jan 2026. Similarly, on the UK CBAM side, this will start the 1st of Jan 2027, and there's no real transitional period. There's just a year to get your books in order to enable you to make your first return in 2028. Now, one of the things to call out here, and if there's anything that you're watching like a hawk with regards to CBAM, it's the ETS, both the UK ETS and the EU ETS. Many people today on the EU CBAM side say, oh, it's far too complicated, it's definitely going to get delayed. The reason it exists is because of the removal or the phase out of the free allocation under the EU ETS. And so as that begins from 2026 onwards, that cost starts to become prohibitively expensive, and therefore you do risk your carbon leakage, where domestic producers would financially and commercially move their operations outside the EU. That is why EU CBAM is existing, to ensure that domestic production is effectively protected. So if there is any indication of a delay to the EU ETS, that is where you may start to see the risk of that delay to the EU CBAM. But currently, it doesn't look like there will be. Although there are a number of very vocal parties in the EU, particularly given the kind of market conditions for many impacted businesses under the EU ETS. So that's what you should really be focusing on with regards to the timeline and any changes to that timeline that may come into play. On the UK CBAM side, the 1st of Jan 2027 is likely to be the starting point. The question is really what happens off the back of the consultation that is currently underway with regards to the potential delay to the free allocation changes under the UK CBAM and the UK ETS. And so that's one to keep a close eye on. That may well we may well see the current phase being, the next phase, the current phase being extended out to the end of 2026, so that the UK CBAM and the UK ETS align and start from that free allocation phase out. So just one to bear in mind, CBAM isn't going to go away unless there are significant changes to how the ETSs are structured and how the ETS timelines play out with regards to that phase out of free allocation. So that is the kind of key piece to keep a close eye on when we think about CBAM and kind of the timelines there. As we've talked about, the scope of emissions varies in the EU CBAM depending on the product, the aggregated goods category, whereas in the UK CBAM, indirect, direct, precursors, all products captured in this case. We looked at the slightly different mechanisms with regards to the financial obligations, CBAM certificate surrender to cover imported emissions under EU CBAM, and then a quarterly CBAM rate that is set in order to enable that payment of a UK tax liability under UK CBAM tax liability on an annual basis initially, and then on a quarterly basis from 2028. The minimum threshold here is another key one. So 150 euros if the aggregated value of all CBAM goods in a given customs clearance consignment is exceeded. This is something that we think is going to maybe change. We've seen changes to the Union Customs Code. This cropped up in the expert meeting minutes from the EU CBAM discussions around how they can start to think about what a reasonable threshold is here. And then the other piece, and then on the UK side, a much higher threshold. So this is just like with tax reviews and tax lookbacks, lookbacks. £50,000 is the threshold on a rolling 12-month basis. So if you're forward-looking, 12 months expected import is above that threshold, then you have the obligation. If not, then you do not. Unlike EU CBAM, where if you don't clear anything, you don't need to do anything, you will need to submit nil returns under UK CBAM. So that's another thing to bear in mind as well. Default values, we've talked about at length. So they exist in the transitional period under the EU CBAM, where the default values for the embedded emissions need to be below 20% for the total embedded emissions of the products. And this is technically reducing to 0% from 2026 onwards in the definitive period, but there will be country level average default values in the definitive period under EU CBAM in line with what exists in the guidance, and then more context on that in the FAQ. So that's worth bearing in mind. And then in the UK CBAM until at least 2031, you'll be able to use the default values. Again, punitive default values. So you really want to be kind of laser focused on understanding where and how you can get as much primary data as possible from your suppliers to truly understand that cost. And then lastly, as we've talked about, reporting frequency, CBAM continues quarterly until the definitive period, and then there are annual reporting under EU CBAM from 1st of Jan 2026 onwards, although there will be a CBAM report with the deadline of the 31st of Jan 2026 to cover Q4 2025. And the UK CBAM, you'll have an annual report in the first year, followed by quarterly reports going forward. So turned each other inside out on that front, and we'll hopefully we'll see some kind of alignment there. But at the moment, the administrative burden is switching between the two CBAMs. So based off what we've kind of learnt on EU CBAM, and how we think about UK CBAM, what are the steps that you, as someone who may well be impacted by UK CBAM in a few years' time, what should you be doing today to understand what your kind of exposure is? And I guess the first step is really around upskilling and educating. So the CBAM consultation is like maybe 100 and something pages if you include the initial scope and then the consultation responses. So I highly recommend reading through the content there, just to get a flavour and a feel for how they're thinking about UK CBAM. There's also additional kind of slides and documentation from HMRC as well as HMT as well, who were originally doing the scoping. and that will help you kind of get a sense of what the UK CBAM is all about if you haven't been involved on the EU CBAM side. Obviously, if you're operating in a CBAM good sector, then you're probably aware of the EU CBAM, and you're probably aware of some of the challenges being faced by maybe your customers, or maybe some of your subsidiaries or sister companies within the EU. So understanding how that process has gone for them, and how you can maybe not replicate the mistakes that they may have made, or implement the effective processes that they've been able to execute against. And then really more broadly understanding, like, okay, what is CBAM and why are they doing it, and what is it in the context of like more broader carbon reporting. We will have a look shortly on kind of the landscape for carbon reporting, and where this is really going, and understanding that you as a business, okay, well, what other reporting requirements do you have? UK CBAM is going to require you to measure product level emissions from your site. If you do that, how does that feed into things like ISSB reporting, SECR reporting, and broader UK carbon reporting requirements that will start to come in even in advance of the UK CBAM coming into effect? Naturally, do a risk assessment. I think the final bullet point here is really one of the key pieces to recognize, is that you need to understand the commodity codes that you buy and sell goods. CBAM, as we've seen, is being managed by HMT and HMRC. In the EU, it's being managed by the tax unit. So this is really a tax driven and a customs driven piece of regulation, where the unit of currency there is customs import declarations, and understanding, that is all administered by the classification of your goods under the commodity code, the CN code, the tariff code, the HTS code in the US. So understanding exactly what codes you buy, what codes you sell, that's really the first point that you should look to both identify how impacted you are by UK CBAM, as well as start to think, okay, how can I get CN codes feeding into my data more cleanly if it's not currently in your CRM or your goods purchase, goods receipt tracking softwares, for your business. Then it's certainly a field that we highly recommend starting to flow through your systems, because it enables you to understand, okay, who are my suppliers of CBAM goods, and who am I selling CBAM goods to, who may be asking me questions if they're in the EU, if they're in any other country that starts to establish a CBAM, thinking Norway, maybe Switzerland in due course, but the US with their Free Trade Foreign Pollution Fee Act, Australia, Canada, most of these really importing nations with that carbon leakage risk will start to develop these CBAMs in response to other nations doing the same. And then you can start to think about your financial risk assessment. Now, this is a tricky one. It's even still a tricky one for the EU CBAM, but really, you know what your volumes are, what the UK ETS price is. You can take a look at how the free allocation mechanism works, and you can start to model where you see some of these costs coming into play. Alternatively, obviously, you can come and chat to us here at CarbonChain, and we can start to feed you some of these models, and enable some of these first two kind of upskill components and the risk assessment components. And then the last piece is really around process establishment. So this is something that many businesses, as they started to recognize and understand the implications of EU CBAM, they started to get more of their legal teams involved in the contracts and in the clauses that are included with regards to this data. There is a significant, if you have a large supply chain of maybe small producers, small manufacturers, then starting that education and training and making it really clear exactly what's required to inform them and their carbon accounting requirements. Then starting this early, building that audit trail, and enabling that upskilling of those suppliers to feed into both your CBAM requirements, but also your broader carbon reporting requirements as well. And last thing, just on business protocols, I think one of the key things that many people don't recognize is that CBAM data influences every single person within the business to a certain extent, if you're operating in these CBAM goods supply chains. So there needs to be a recognition that across the business, this should be a coordinated effort to make sure that CBAM is integrated into all of the decisions and all of the thinking that you're doing as a business. It will impact you if you're from a finance, tax, and customs perspective. It impacts your financial management on paying your CBAM liability. It impacts how you track and measure what your CBAM liability needs to be, how you submit your returns, who's doing that, whether or not you're permitting certain goods to be imported on the back of not having actual data. All these things where there should be triggers and controls in place with regards to CBAM. If you sit in the purchasing or procurement team, particularly today, if you're exposed to the EU, you need to understand how much this deal is going to cost you from a CBAM perspective. And so you can start to do this today on EU CBAM for products where there are existing ETS benchmarks, and you can start to understand what the numbers look like from your suppliers to inform what that CBAM cost might well be in 2026. But also, if you're then looking to understand, well, if I want to lock in my costs, how do I inform, my hedging strategies, if I want to fix my costs on CBAM, how do I then engage with the finance team to make sure that we have a strategy in place to purchase certificates, to manage hedging, to do all sorts of different processes to ensure that that when we get out into 2026, 2027, and we're using actual numbers to finalize these costs, that we have that risk managed cleanly within the organization. And then lastly, really the sustainability teams helping on an educational side to the purchasing procurement team on what these numbers mean, how they can check these numbers from the suppliers to make sure they're right if they're missing any information, understanding what the broader carbon reporting landscape looks like. So if a customer is asking you for a product carbon footprint versus a CBAM data set, what are the differences? How can you check the differences? As well as then really understanding when to kind of dive in on challenging suppliers on their data, understanding what the issues are around the data that you're seeing. So it's really a kind of a team effort across the board to make sure that you get CBAM right, because the commercial implications of getting CBAM wrong, as we will maybe see with some EU CBAM impacted businesses who are maybe contracting deals today that will start to flow into the EU in 2026, may have relatively significant impacts on their on the outcomes of their business. Okay, so we're done. Hopefully, now we're hopefully many of you have kind of been through the EU CBAM hurdles and you're experts here. And now we've just gone through some of the kind of key challenges on the UK CBAM side and how you can understand and set yourself up for success on that front. So this is carbon reporting, and really kind of from a commercial impact, this is where we are now completed. To my point earlier, I think the question then becomes, okay, how does this sit within the broader context of carbon reporting for your business? And so when we look across the various stakeholders and the various reporting requirements that we see coming from all of those stakeholders, you start to get a much broader sense of where the challenges lie, and where having a kind of coherent strategy with regards to carbon data as a business is a license to operate, and really a fundamental enabler of both low carbon decision making, as well as ensuring that your customers are satisfied and also able to remain compliant themselves. So when we look across this board, we see many different pieces of regulation, many sort of high level components where scope 1, scope 2, scope 3 emissions for you as a corporate feed in, as well as then where customers will be asking for data on the product emissions intensities such as CBAM, CSRD, and various future CBAMs and other reporting. And then from a regulatory side in the UK, as we start to think about things like the SECR reporting requirements, which have been in place for a while now, transition planning requirements that we're starting to see surfacing from FCA and others, and then the ISSB reporting requirements that we will start to see trickling down, as well as any of your EU customers who are currently going through the process of CSRD reporting. All of these requirements needing to have carbon data at the product level to be able to feed through to these reporting standards. So as a business, knowing that you're able to answer any of these carbon data requests from any of your customers is something now that we see being, of really critical importance, and not really as a nice to have anymore, but really as a license to operate within these heavy emitting sectors and these heavy emitting supply chains. So I wanted to touch on and talk a little bit about what we do here at CarbonChain. So we are a carbon accounting software provider focused on the commodity sectors, really working with both commodities traders, so the intermediaries who move these products, but fundamentally the work we do with producers of these CBAM goods, so with the manufacturers of these products, is really where we can enable both their compliance and then really directly your compliance as a business impacted by the UK CBAM or the EU CBAM, or having to meet other reporting requirements across the board. So I think hopefully many of you will agree that, as a result of EU CBAM, that time frame for we're going to set a decarbonisation journey over the next 1 to 5 years has really reduced down to we need to do CBAM reporting, today it's today. 6 months ago it was 6 months ago, as we've seen this kind of phase out of the availability of using default values. And so at CarbonChain, we're really here to empower the manufacturers and the suppliers that you work with. We recognize that in many cases, carbon accounting at the product level is new. There is a lack of internal resource to continuously measure the product carbon footprint of the goods leaving these sites. And really there are still questions outstanding around where to start. Do I do an EPD? Do I come in and get an LCA? Do I do a PCF? Like, how do I ensure that my customer demands are met with regards to the various reporting standards that are here and in place today? And so at CarbonChain, we're really here to power your carbon reporting engine. So whether you are a manufacturer, an intermediary, or a end product user within the EU, at CarbonChain, we help to manage data requests for carbon data efficiently and seamlessly through the same platform. So our CarbonChain platform is really tailored towards enabling communication of carbon data, as well as enabling the tracking, aggregating, and reporting of that data, both to customers and other stakeholders, as well as to meet regulatory compliance needs, such as CBAM and such as CSRD reporting on the carbon side. We also enable you through our database of emissions factors to inform your low carbon procurement decisions. So as we start to see EU CBAM coming in and having a cost implication, how can you get a sense of where your lower carbon suppliers are and what that cost is going to look like to enable you to inform the changes that you need to make in some cases to those procurement decisions. And that's really where the CarbonChain platform can come in. And as it's that one-stop shop for your carbon data as a business, we can ensure that across the board, you are able to make the right decisions, but also enable your customers to go forward and use the data for their own reporting requirements, their own regulatory requirements as well. So if you'd like to learn anything more about what we do, feel free to get in touch with myself or one of the team via our website as well. Just to kind of reiterate and I guess express, so as CarbonChain, we have been helping a number of clients today on the EU CBAM side. We've helped support over 500 declarations, avoiding 450 million euros of penalties so far, equating to over 2 million tons of CBAM goods. And through our supplier engagement programs and driving both on the webinar side, on the one-to-one engagement, all of the simplified reporting tools and capabilities that we offer through the CarbonChain platform, we've helped to enable thousands of suppliers to start their product carbon footprint journey and start to prepare their EU CBAM compliant data, and we will be doing the same thing on the UK CBAM side as we start to get more clear sense of exactly those reporting requirements. Across the CarbonChain platform, when we look at product carbon footprinting and how we enable those trade emissions calculations, we're currently tracking around 2.3 billion tons of CO2 on the CarbonChain platform. and have enabled over 1 million product carbon footprints to be generated directly through the platform, whether that is at the transaction level through APIs or on an annual or quarterly basis to customers. So plenty of experience across the reporting sector, and happy to share additional information of any of these case studies or samples of some of the work that we do. So yeah, please do get in touch if we can provide any additional support there as well. Fantastic. So with that, thank you all for attending. I'm now going to dive into the Q&A section, which I see there are a number of questions popping up. So I'm just going to scroll back down to the bottom and start from here, then work my way up. So feel free to send in additional questions. Apologies if I don't get through to all of them. I will we'll send answers over email as well. So the question is, if a distributor has already imported steel into the UK and then supplied it to us, would they be responsible for the reporting and tax? Yes. So the reporting obligation falls on the importer. If there is a change in the ownership during the customs process, then it may be that you take on the CBAM liability. But in many cases, if those goods are already under free circulation in the UK, then you would not have any CBAM reporting obligation. We import aluminium parts, we braze together and add other non-CBAM covered parts to make us final for when CBAM reporting. Is it only for the aluminium parts within, or do we have to get value for other parts too? So once those goods are in the UK, there is no CBAM reporting obligation. So, it is whatever you clear, customs clear into the UK and release for free circulation, that's what your CBAM liability will be based on. If you're taking that good, adding other goods to it, non-CBAM covered goods to making a final good, and then using that good, those are irrelevant. If it's under like an inward processing regime, and you're then processing and exporting it, then again, you would, just like the EU CBAM, there would be no kind of CBAM cost because they're not being released for free circulation. But if they were being processed and then they were subsequently released from that inward processing regime, then you would need to pay a CBAM liability, but only on the aluminium parts, not on any of the non-CBAM goods in that case. So again, it falls back to what CN codes have you released for free circulation into the UK. That's what you would need to then use to assess and complete your CBAM return. Does any due diligence need to be done on supplier provided data, or do we just take their word for it with 2 thumbs up? Great question. This is something that is going to be fascinating to witness under the EU CBAM, because today, to your point, you take their word for it. Those are the numbers. That's what you use. That's what you report, because there is no verification until 2026 data is available. So the verification for CBAM data will be taking place in Q1 of 2027 and will need to be done before the end of the 31st of May 2027 on that 2026 data. Now, that is a very tight turnaround from a time perspective, particularly as businesses will be preparing their 2026 data in early 2027. We suspect there'll be some kind of changes there with regards to how that works. But yes, today you would just have to take their word for it. And we suspect that there will be more push to get verification done in advance of the kind of date, so that you as a business can make better or more informed decisions around the reliability of those numbers. We will be fortunate in the UK because the EU CBAM verification will be in place. And if the goods are coming from the EU, they're likely, or they may be under the ETS, so they will already have been verified in that sense. So yeah, today, unfortunately, just like in the EU CBAM, we're taking suppliers' word for it. You have default values. You can, in some cases, review the numbers, look at the share of default values, and get a sense as to whether or not those are right or wrong. But it's worth definitely paying close attention to how verification is set to work and what the time frame will look like there. Why is the UK developing default values when the EU CBAM default values exist? So these will be based on kind of trade-weighted default values. So because there's a single figure, and we'll have very different emissions intensities across different countries, that trade-weighted figure is what the UK has decided to use to ensure that it keeps a reasonable intensity that's fair across the trading partners, rather than using the EU CBAM default values. I think the EU CBAM default values in the definitive period, the intention is to have them at country level. And as you can imagine, I think that is going to be very difficult to do, both from a political perspective, but also just from a comparability perspective. Having and ensuring that your methodology across different countries aligns is one that we we'll see very 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 interestingly to enable the comparability between the two. Seems crazy to go straight from first reporting period into the first accounting period with no transition. So, the transitional period in the EU CBAM was really just you can use default values. The reason they won't go, the reason they have to be quick with this is because of the fact that the free allocation phase out starts in 2026 or may start in 2027. That's why the EU has the luxury of a transitional period. The transitional period in effect of the UK is enabling you to have a year in 2027 to gather as much actual data as possible, and then reporting in 2028. But yes, it's something that many businesses impacted by CBAM, both in the UK and the EU, will likely have gone through the EU piece first as well. Have they released the HTS-CN classifications for UK CBAM, which will be in scope? Yes. So there's an appendix to the original guidance, which for the UK CBAM, I think it's Appendix A, which has all of the CN and HS headings that are captured under CBAM. And so, unlike the EU, whether they outline certain exemptions, but under the UK CBAM, they just say anything captured under this HTS code, so HS code, this 4-digit code, is in scope, unless they explicitly state it. And that's where the deviation between the EU and the UK CBAM will come into play. Do we have any idea of what the cost per ton of imported product is likely to be? So we know the UK ETS price today, it's around £40. Working off the back of the free allocation and the specific embedded emissions, direct and indirect, for the goods that you're importing, you can start to build some models to assess what that number will look like. We don't know the rates yet, but that's really what will hold back the piece there from really having concrete numbers. And we also don't know what the default values will be either. Is the threshold 50k per commodity per supplier, or 50k of the same commodity form from multiple suppliers? It is on an EORI basis, on an importer basis. So you as the importer, it's the value of the customs value of the imported goods that you would need to track. Is the 50k threshold per entity based on a group if you FX are in a VAT group? So yeah, it'll be done on the importer of record. So much like in the EU CBAM, where it's on the EORI basis, that'll be what will be the kind of threshold piece that you should check with regards to whether or not you will be captured in scope. At which moment can you buy the ETS, which needs to be paid upon customs entry to the HMRC, presuming that the ETS changes value up and down over time? So the UK CBAM rate is going to be set on a quarterly basis, which is the same at which the ETS rate is set. Yes, you can hedge. So there are UK allowance hedges. You can do some various kind of spot forward, look at some ETCs, those kinds of things. So much like in the EU CBAM case, there will be hedging capabilities, and is something that, yes, if you are a trader or this is your business model is importing CBAM goods in large volumes, then yes, you will want to and be able to manage your position against the movement in the ETS via various brokers and third-party suppliers as well. In that case too, it will just be a case of tracking in that sense. Does decoiling, cutting, coating, cut length by a transformer does not alter the commodity code or country of origin need its emissions to be gathered for CBAM? Great question. Certainly one that has caused a lot of kind of challenge on EU CBAM. So the definition of an installation is where really a technical unit where processing takes place. Now, if you don't change the commodity code and you don't change the country of origin, then if you subsequently exported that good to the EU, for example, and it was origined outside the UK, then the country of origin that good is not going to be the UK. And currently, under the logic in the registry, you can't set the country of production and the country of the installation to be different. So on the basis of that, you would you kind of go back and forth with regards to that discussion. But those processes that consume electricity decoiling, cutting, coating, electricity and fuel in some cases would be considered under a system boundary to be adding emissions to that product, and therefore you would be captured as an installation under CBAM, and you would likely want to talk to your legal or your trade compliance team as to whether or not you should be changing the country of origin of those goods if they are being substantially transformed on site. I'm conscious we've got a minute left, so I'm just going to answer one more question. There is a question here, which is there a guide we can use to see if CBAM data are realistic or not to help us validate the data? So at CarbonChain, we can certainly help you with that. We I can share some additional context around exactly what good data looks like. And so hopefully that can give you some insights into exactly what you need to consider when you're looking at these numbers, as well as what reasonable intensity figures would look like across different product categories. So with that, thank you all very much for attending. I hope that was useful. If you do have any additional questions, then please don't hesitate to reach out. My email address is nick@carbonchain.com. As always, we'll be following the updates on the UK CBAM and broader CBAM changes. So do follow CarbonChain and subscribe to our climate newsletter, and you can get all the updates on when we run these sessions. So thanks again. Have a great rest of your day, and I'll speak to you all very soon.